Okay, Lindsay, are you here? So I'm gonna, just as the college president, kind of get us going with, I think that we need to elect a chair for this committee to run it instead of me. And so do I have a nomination for a chair?
I'll nominate Marcia.
Okay, a second. Anna. Okay, all in favor?
Aye.
Okay.
Marcia, you're on mute. I should say trustee.
Thanks, Anna. I guess it feels a little strange, but good.
You know, that's the way these kind of committees work. So I'm turning it over to you to run the meeting now, Trustee Croninger.
Well, thank you. First item is public comment, and our public comment guidelines appear to generally follow the ones for the board. I'm hopeful that as we move along, we'll be able to figure out a way to make it a little less formal. Can somebody describe how it is we're going to let people in to ask questions or make comments from a technological point of view?
So I think we can ask our, Oren, are you still here?
Oh yeah, I'm always here.
I know you're always here. So would you explain to everybody how that works?
Well, since we had nobody that registered earlier for public comment, if people want to make a public comment, they would press the raise hand button. And then that would show up in our list of attendees, and I can let you know that there's somebody that raised their hand, and then I will promote them here to the panel. They'll be able to turn their camera on and their mic on, and they can make their comment. And then when they're done, I'll put them back to the attendee room.
So you'll let us know when somebody has raised their hand, basically.
Yes, I can do that. I can just type it into the chat.
And we'll be keeping an eye on it too. I've got the attendees list up and I can see if they raise their hand also.
Okay, Jonathan has his hand up.
Yeah, I don't know maybe if this is like the place to discuss this, but one is a question, one's more of a comment. The first is a question is, I thought the resolution we passed made it so that public comment had to be open to the end of the item, not on a deadline. So that's a little different than what we have. And the second one is, I think we liked the committees in the past because they were, everyone was on the same table, unlike the board meetings. So maybe everyone can be a panelist, which is the same as everyone being on the same table. Because that was like that was a feature that we liked, is more the casualness. And so maybe if everyone's a panelist, then we could see them and we're all, on the same screen here, instead of that, I don't even know the attendees are here unless I specifically look at it, and I don't even know what they're thinking or their facial expressions. So, and that was the whole point of the tables back then, or how we sat around the table. So
Well, I'm in agreement with that. I think maybe we can talk. I don't think we're agendized for a full discussion on this, but maybe we can come up with something administratively that will work.
Yeah. So if you'd like for us to, we can go ahead and let everybody in and then ask if you have any more comments. And then, most subcommittees run pretty informally overall. And Jonathan's correct. We are not going with the new guideline. We didn't have the new guidelines in here yet, which means people can speak up anytime the subject's up. So, so however the board would like to work with this, I think is fine.
So in terms of public comment, we've confirmed, Jasmine, we don't have any official requests.
No, I didn't receive any requests for public comments.
Okay, so I guess we will consider that item complete and move on to, we've done selection of chair, establishment of meeting location. Kindred, did you want to say anything about that in particular?
Not really at this point, other than recommending to the board that until at least after December, that we try to stay remote, and then maybe revisit the in-person meetings.
So that would allow us as well to see how the holidays go, basically.
Yes, we're concerned. We're already seeing an uptick in some of the counties around us. The Bay Area has already had a couple go from orange back to red. I think we've got to be really thoughtful as we're watching through the numbers right now.
Okay. Do we have anyone raising their hand on this, Oren?
Anna, and then Lindsay.
Up, there you are.
Yeah, all I was going to say was I concur with the notion of the virtual or the remote for the time being, and also give us a handle on how things are shaping out with our participation and tone of participation, which is something that I want us to be mindful of, and maybe set some house rules about following some of the earlier discussions. But yes, I agree with the virtual.
Okay. Anyone else? We have an attachment to this, which is a calendar. So why don't we go to the attachment and talk about that? Kendra, did you want to introduce it?
I muted myself because I didn't want to make any noise. I'm going to ask Lindsay to cover this because she was the one who really put it together with the idea of the reports that are coming up. So Lindsay, would you like to go over this?
Thank you, Dr. Murillo. Can you all hear me okay? I know my audio is not perfect. Okay, great. So I put this planning calendar together for the remainder of this calendar year and all the way through next calendar year, so we could see what an entire year would look like. This is lined up with our primary governing board reporting calendar. So you're seeing all of the items that will go to the primary board meetings coming to this subcommittee prior to when they would come to the full board. There aren't any new items on here that don't go to the full board. They're all the same items that go to the full board. They'll come here for a more deep dive review. The timing of some of these is not perfect because our different months don't always line up perfectly. Specifically, the quarterly budget adjustments, those items will be coming to this subcommittee at an unusual time because they just don't quite line up exactly with when we have planned to have these particular meetings. Otherwise, all of the tentative budget and adopted budget presentations come to this committee right in time, so you get to see it before the full board. And we attempted to make this committee meet quarterly, but again, due to the tentative budget and adopted budget specifics that we want to make sure you understand very well, you have a little bit more meetings in there than just for a year. And of course, these are the primary items that we plan to bring to this committee. But if there's other ad hoc reports that are requested, we would add those as those come up. And these meetings are scheduled to be, excluding today, because today was our first meeting. Going forward, these meetings will fall 1 week before the primary board meeting.
Okay. Anna or Jonathan, did you have any questions or thoughts?
I did. Just one, Trustee Croninger, I need you to know that I have a standing Monday meeting at 5:30. So, and you know, that's been ongoing for the past 3 years before we set this date. So I'm not sure how long our meetings in general are going to be, but my standing meeting is at 5:30.
Okay.
I think it's 5:30. I'll have to double check. It's 5:30 or 6, but I'll double check.
Okay. No, I appreciate that. I mean, if it's turns out to be 5, I would say that sounds a little tight.
Right, right.
5:30 might work well, and 6 would certainly be comfortable.
Right. I'll double check. I should be able to even find that out as soon as this meeting is over tonight. So I'll let you know at ASAP.
Thank you. Jonathan, thoughts?
No, this looks good to me. Nothing to change.
Well,
Yeah.
as
Yeah.
usual, I had some thoughts, which I think I shared with you, Kindred, which is that there are topics, both larger and smaller, that I think we would benefit from discussing. And on the smaller end, I think in the past, what would happen is we would get questions which might or might not fit under an agenda item. And one way to deal with that is the way that we do sometimes with the board meetings or with CPC, where we have our superintendent president make a report, kind of an update on what's going on since our last meeting that you should know about, or we're expecting to hear about, that kind of thing. And that would give an opportunity for what we hope to be not only us to ask questions, but other folks to ask questions or say, I understand why you wouldn't know the answer to this, but when we get to our next meeting, maybe, or somewhere down the road, could we talk about X? So that's one thought I had as a standing agenda item for these meetings. Any thoughts, folks?
Yeah, that makes sense. Or, we can add topics as we go too.
Maybe would it help if we just added a staff, like a staff report to kind of either whether Lindsay or I or both have something that comes up in some of our meetings that we could report out that would make a difference to the finance and audit committee?
Certainly, from my point of view, I think it could be you or Lindsay or Rudy, depending.
Yeah, so we'll just put like a staff report, and then whichever one of us has the information or has been at the meeting can follow up with that.
Okay, and then the second thing that I thought was, and I'm now looking for my email because I didn't file it properly. Topics that came to my mind that I thought we might want to discuss. And that includes, I don't know if you have it handy, Kindred, but that included, for example, how we get to some sort of a presentation to the board, the full board, that responds to our resolution 18 about identifying the institutional resources that we and the money that we spend in the budget for supporting and the success of our Black and African American students. We have a section of resolution 18 that talks about that, and yet I feel like as board members, I don't yet understand the answer to that. And so I think this committee might have a discussion about how do we get to something that the whole board could see and understand on that. That was one topic. And I had a bunch of others.
So we'll maybe in the January meeting, January 10th, we can add an item. We've been working on resolution 18 and kind of going through what's been done, what's not been done, what needs to be done, and then we can add some of the dollars and cents items, like we can show you what's been on Umoja, on some of the other very focused arenas that support the work of resolution 18. So we'll put that for, if that's okay with the board, January 10th.
Yeah,
Sure.
it's fine with me.
Yes. Yeah, that sounds fine.
Thank you.
Okay. Let's see. Another topic I thought of was the concepts behind how we're going to get to or closer to an 85% personnel cost. And we have talked for years about whether we should have that as a policy goal. our personnel, fundamental people costs versus our fixed cost. And I think that in my mind also might be a discussion about understanding our fixed costs better. What are they? And which ones are increasing, which ones are pretty stable, kind of having that discussion in connection with that. And priorities and projections for the undesignated reserve was something we might discuss. The costs of online versus in-person instruction and what are the budget impacts. I mean, I think I saw a savings overall that happened when we went to online. But, as we sort through this whole question of how our landscape of offering classes, the online, the hybrid, the in-person may change as a result of what we are learning from COVID and what our students are saying they want. That has cost impacts as we move in different directions. So I'd like to maybe understand that better. How our planning intersects with our budget. And the facility cost impacts of that maybe as well, though I can see that can move over into the facilities committee as a topic. I could go either place, but I think there's money at stake if our needs and the type of needs that we have for facilities change as a result of our assessment of what we've learned. Also on my list was student basic needs budget. What is that and where do we get that money? The cost of expanding the Promise program in different ways. We might have a discussion with Jeff about that, what directions we might go and where that, what that would cost us and how we might build that. We've been told a number of times that we should, because we're doing our own payroll, that it's actually, FCMAT told us that we were legally required to hire an internal auditor. And we haven't, and I'd kind of like to know more about that. So those are some of the topics that came to my mind, and I'm sure other folks would have things as well. So rather than just having an agenda that is this important set of documents, and I appreciate this. I mean, this is really helpful to have this laid out, that we also have one or two of these other topics that are more, shall we say, policy oriented or oriented toward understanding our budget better.
So you're recommending that we put maybe one, well, as time permits on each agenda, maybe addressing an issue depending on where we are at what time. So we'll go over this list and try to appropriately place them based on kind of what we know and learn and where we're at with some of these. Yeah,
I mean,
I'll work with Lindsay on that.
No, I think that's fine. I mean, what we could do is prioritize and talk, and you obviously tell us when you would be ready to talk about any of these topics. So.
Okay.
But we might also have, I mean, Anna and Jonathan and others in our community might want to say, gee, I'd really like the committee to talk about something else, some other topic, and then we can have kind of a running understanding of what might be on that list. Anybody raising their hand here? So I don't want to overlook people who want to talk about this item.
I don't see any hands right at the moment.
Do we see everyone who's attending?
There's a couple people that have not allowed themselves to be promoted into the panelist room, and which is their right. I mean, they don't have to be in the room.
No, that's fine. I'm just wanting to be sure not to forget anyone who has comments.
Cornelia has her hand up.
There she is. Cornelia.
Okay, can I speak? Yeah, my question would be if there is the option, and I'm not sure if that was included in what trustee Croninger just said, and by the way, good afternoon, everybody. Is there an option that potentially like governance group leaders could make suggestions what we feel, if there is something that we feel the board or the subcommittee should look at? Would that be an option, or would that just be an informal email maybe to the committee chair, or?
Sounds fine to me. Kendra, do you have a?
No, I think if there's something that's of particular interest, just send Jasmine and I a note, and Marcia, and we'll agendize it if we have the information at the time, or depending on what the circumstances are.
Yeah.
Great, thank you.
And then maybe we could also have a place in the agenda where we update people about, you know, we've gotten requests to talk about some topic, and we plan to put it on, you know, if we know when it is, or if we, at some months in the future. I mean, I think that would increase people's knowledge of what's going on.
Yeah.
Okay, anybody else? Somebody want to make a comment about this?
Well, I like the idea of having a prioritized list, and particularly tied to, certain annual, budgetary, deadlines, but also our priorities, as in the Proposition 18. One of the things that that I was wondering, first of all, it's like, do we still need the calendar up? Because I'm not able, wonder if we can stop sharing screen unless we're going to be referring to it. And then the other thing that I like, thank you. The other thing that I liked, is the, is the idea that we can have Trustee Croninger, this kind of standing topic that we know we can expect, and if there's nothing to discuss, it's nothing to discuss. But those budgetary items that we know are going to always present monthly, it would be nice, because one of the reasons that I feel that this committee is going to be useful for a new trustee like myself, although it's a year now, so I guess I'm no longer, the honeymoon's over. But I guess one of the things that I'm excited about is, learning a little bit more and being able to drill down deeper on these budgetary specifics, because these, they fly by, so fast, and I'm not sure exactly what I'm seeing. And I'm really happy to get a little bit more depth of knowledge about what's happening. So I really like that idea a lot.
All right, I guess we're done unless anyone's raising their hands. And we'll go to the monthly budget update. I'm guessing that's Lindsay.
Thank you, Trustee Croninger. Yeah, I'm gonna go over the monthly budget update. Rudy will do the 311. Okay, actually, can we put this one up on the screen?
Please.
Again? Thank you.
Great. That would be great.
Sorry, it's a lot of numbers. While he's putting it up there, I'll start chatting. So the board just recently saw at our last board meeting the September monthly budget update, but we quickly put together a current one for the board to review. So this is the October monthly budget update. Hopefully we caught any corrections that needed to be made. I think we did, but we'll see if you find any more. I apologize, I just lost all of you guys. Now I can't see any of you. Oh, well. So this first page is the unrestricted general fund portion of our budget and actuals by itself, completely separate from the COVID mitigation fund and from the HERF funds. So we're still a little early in the year to be looking at the actuals, but not too bad yet. We're coming along and on track for the most part with our prior year actuals year to date through October. I did notice one variance that you may all notice as well in the revenue section. Under state revenues, we're a little low year-to-date at 5.6 million, whereas normally we're 11.6 million. That's because we haven't booked the October apportionment revenue journal entries yet, so those are coming. It's just a timing issue. And then the same scenario with, if you look at last year, October 31 of 2020, under other financing sources, you see $735,000. That's a bit higher than what you're seeing today, year-to-date, quite a bit higher. And that's because as of this time period last year, we had booked our first quarter indirect cost revenues from the financial aid media campaign, and those haven't been booked yet. So that number will come back up closer to our budgeted amount of the 550. So just some timing differences there. Any questions on this page before I go to the next one? Since we're a small group, we could do questions on each page. No, and I apologize, I can't see you all, so.
Not seeing any hands.
Okay, so we could go to the second page. This second page is just the unrestricted general fund COVID mitigation fund that we set up last year. So at this point, we're starting to see more expenses coming through this fund. Any comparison to prior years is irrelevant because prior year we didn't have this fund. So that very last column is a bit irrelevant. You can disregard the last column. So we still have well over, 5.8 million to spend from in total for this fund at having only spent 1.5 million at this point in time. But it is budgeted. We'll see that on the next couple pages when we get into the HERF portion of this report. Keep in mind, you're not going to see any revenues showing up in this at all this year because this fund was funded in last fiscal year with the lost revenue money that came into the general fund from HERF. This is just now a carryover of that fund balance from last year and our expenditures spending it down. So don't expect to see any revenues coming into this fund this year. You're just going to see the expenses coming out of it. I don't know if anyone has any questions about this one, but there's further details on this fund on a few pages in here that might be more interesting to look at.
I did have a question, VP. My question was, you said that the 5 million balance is allotted for, though, correct? It's just unspent, but it's already allocated. Is that correct?
Right.
Okay.
That's right. Excluding just a small dollar amount. There's 287,000 left that's not allocated.
Okay.
And you'll see the list of all of the different projects it's allocated to in a few pages.
Oh, okay.
I'll point it out to you.
Thank you.
Any other questions on this page? We could go to the next one, Orin.
I think you can move on.
So this page, we created this for the board, this specific style report, not too long ago now, to assist us all in understanding our movements in our budget from the adopted budget over to the adjusted budget. This is unchanged from last month when you just saw it in the full board meeting, but here it is again. Make sure, if you have any specific questions, we can go through it. But this is just telling us that when we make an adjustment to our adopted budget, how large the adjustments are. And then in the bottom in the box, it helps us understand how that's going to impact our ending fund balance. So that's why we created this, to help us all know where are we landing with our ending fund balance after we've made these various budget adjustments throughout the year. So as we go throughout the year, this report gets a lot more interesting with a lot of additional adjustments. Right now, there aren't very many adjustments, which is normal. And again, this one is just the unrestricted general fund. The next page is specific to only the COVID mitigation fund. And then that one, you can see that ending fund balance last year that carries over and how we're going to spend it down this year.
Can you remind us, Lindsay, about what our minimum policy balance for reserve?
Yes, so the board has a policy on our unrestricted general fund minimum required balance. And that is made up of two pieces. all community colleges are required to have 5% of our budget set aside, and that's a state mandated level. But our board has the 5% plus an additional 15%. So it's pretty easy math, 20%. And when we talk about having $100 million budget, that means we need to have about 20 million set aside. It's handy that we have a $100 million budget for doing math. But our budget is higher than that minimum required set by our board policies. We're above the 20 million.
And so our undesignated reserve is approximately,
rough numbers, 10 million compared to this page where you see that our balance projected at the end of the year would be 30 million.
okay, so
Very
we're,
rough numbers.
so if we talk about priorities for undesignated reserves, it's that money we would be talking about, which will change through the year, but
Correct. And we also have board minimum policies for our equipment fund and our construction fund. Those were set just at flat dollar amounts, based on what we would typically spend from those funds back when we wrote that policy. And so the equipment fund, the flat dollar amount we're required to have in reserves is 1.5 million, and the construction fund, it's 2 million. And we've always been above those dollar amounts since we had that board policy passed. However, not always very high above, usually pretty close to that amount. I don't have those numbers handy offhand, but just so you're aware of the other board policy minimums we have.
And why did we add the additional 15% over the 5% mandate, state mandate? Why did we?
Yeah, let me add a little more to that, because I failed to mention the complexity of that minimum requirement. So it's either a flat 15%, or it could be equal to deferrals that we're expecting from the state. So over the years, we've experienced times where the state is going to defer the apportionment revenue they're going to give us. And they tell us that in advance, say, hey, we don't have enough money to pay you next year, so we're going to defer our payments to you. And so the board, knowing that was a cyclical thing that can happen at certain times, they asked that the board policy minimum be either just a flat 15% on top of the 5%, or the amount of the deferrals we're expecting. So in fact, we could need to put aside even more, but that hasn't been the case. The deferral amount has typically been lower than the 15% for us. So that's some of the rationale of where the board was coming from, but Trustee Croninger can speak to this because she was here and instrumental in writing that policy. I'll let Trustee Croninger speak to it more.
well, when I came on the board, we didn't have a policy that described what amount of reserves we might think were necessary or why we might think they were necessary. And we had a lot of board level discussion, and we had, I would say the whole campus-wide shared governance discussion was probably 2 years talking about those issues. And this is what came to us finally, to the board finally, as a recommendation from our campus governance groups as the amount that they would like to see. And the thought is that it has to do with fundamentally unexpected problems that come up and being able to deal with those quickly and effectively. And I have to say that potentially, though we're very grateful for the federal money, COVID was looking like exactly that sort of situation, that we would be using those reserves as we needed to deal with COVID. And, you know, going forward, there may be no more federal money and we may still be dealing with it. So it's the unexpected that was kind of the focus here, and the ability to pay our employees in times of, it used to be that the state didn't have its budget on time and then it wouldn't necessarily pay anybody on time. So there was also a concern about that. That kind of went away, but you never know. It can come back. And so those are the thinking, that's the thinking that went into it at the time.
Okay, that sounds good. My main reason for asking was that, you know, in the event too, that money needs to be spent and it's there. I just, you know, hope that it's also okay that if something comes up and we need to spend the money outside of just, something else, since we have that built-in cushion that it's okay to spend it, on something that, that would be an emergency as well, since you're holding back that expenditure. So, but
Yeah.
that makes sense. Yeah. Okay. Thank you.
You
for that
absolutely,
clarity.
the board just needs to decide that and
Right.
also talk about the kind of policy issues we had in mind.
You're right.
So,
Right. Okay. Thank you. That clarifies a lot. Trustee
Uh,
DeBoo's hands up.
Jonathan,
So the reserves are at 30 million. I think you might have mentioned, this includes the HERF money that's sitting in there, right? Like that's not, or is that completely unrestricted
That's all unrestricted.
aside from HERF?
Yeah.
Yes.
You also have the second page. So like Lindsay was saying, you got to take this page plus the next one over, bring those together.
Okay, so the next page, this would be minus out of the reserve. Like, is the reserve holding money that's meant to be spent or designated to be spent soon? I guess what I'm asking. Because 30 million is a lot bigger than
What we
you know, what-
thought.
yeah, yeah. Is
Right.
it holding HERF money?
No, so what happened last year was we were expecting to have a large deficit last year. And with the HERF money coming in and the lost revenue money coming over to the UGF from HERF, we mid-year, we're still expecting to have a deficit. And we thought we would use some of that lost revenue money coming into the UGF to cover the deficit. But last year turned out to be a surplus. So not only did we not have to use the lost revenue money that came over from HERF in the UGF to cover the deficit, we also had a surplus which increased our ending fund balance, as you're seeing in this $30 million number. So we're just seeing our balance is a lot higher than we were expecting, say, 8 months ago. And no, it's not set aside for any specific COVID items at this time. That's all in the HERF and COVID mitigation fund.
Okay, so yeah, so that 30, because that's what I was thinking was we did the, revenue loss replacement, and then that money went into the general fund balance, but I thought that money would be then spent on the COVID relief, because that's kind of was our strategy, is count it as lost revenue and then spend it for the different ideas that we had. So that's good to know that it's 30 million. I mean, that is pretty significant at this point. That's, what is that, 30% of our budget, right?
Yeah.
Could we get a percentage of this? Like, what's our required and how much more? Because then that can help us know, like, this is money that could be maybe invested in priorities.
Yes, we can.
you said earlier, didn't you, Lindsay, it's on the order of 10 million over policy minimum reserves. So that's what we're talking about is when we say undesignated reserves, we mean the money that is above what we have said in policy we should keep as a reserve. And so if we talk about priorities for that 10 million, that's a significant chunk of money.
Right.
And personally, what I have wanted to avoid, what I think has happened in the past is that we tend to not treat it as a whole chunk of money and we sort of spend it in small amounts on various things. And then you really can't point to anything to show for it. Although I'm sure it was not badly spent, it's just not, you didn't go with a vision of what's important to use this money for. Are you still having questions, Jonathan, or shall we go to Cornelia?
I'm done, yeah.
Okay, Cornelia?
Yes, thank you. It's just a question that I understand something correctly what Lindsay just said. So Lindsay, you're saying that we did have a surplus in the actuals 2020-21 without utilizing any of the HERF funds. So even without any lost revenue offset from HERF funds, we ended up in a surplus.
Yes, ma'am.
Wow.
Maybe it should be on our list to understand why that happened a little better. I mean, whether it comes from the shift to online or why it happened. And I don't mean you need to answer that today, Lindsay, just conceptually.
Yes, I'd like to put together a report on it because it's quite complex.
Mhm.
Thank you, but that's good news.
Certainly.
Oh, I forgot we were in the middle of a report. Sorry. So let's see, what page do we have up there?
3,
Okay,
3
Can
of
we-
9.
skip to the next page, number 4, which is the same layout as the previous page, but it's specific to the COVID mitigation fund. There we go, okay, great. So the COVID mitigation fund, as of the adopted budget, we didn't have all of the projects rolled over from last year into this year yet, so those ended up all being budget adjustments. So that's why you're seeing actually quite a large dollar amount of budget adjustments in this category. And this is tying out to how much we have allocated right now from this COVID mitigation fund for all the various proposals that we had in this budget in the prior year. And then these 3 new ones are why those are identified as specific 3 new ones, because the other ones are all carried over from the prior year. So that's what that's showing us here, is just that we, excuse me, did budget adjustments to input those proposals into the actual budget. Again, it's going to be easier to see those in 2 more pages when we get there. So the next page is where we get into the HERF reporting. This first page on HERF is all HERF 1. So we had 3 different versions of HERF 1, the institutional, the MSI or the minority serving institution portion, and the student portion. All of these have been fully expended for quite some time now. That was the first batch we got at the very beginning of COVID. I don't know if anyone has any questions about this. It's the same info we've been showing for a little while now. Now the next page on HERF 2 is the one I've been alluding to multiple times here now. So this one, we have the HERF 2 institutional, the COVID mitigation, which is a UGF fund, the minority serving institution portion, and the student portion. So the HERF 2 institutional portion is now fully expended. We did some journal entries at the end of the year to account for the exact lost revenues, because for a while we've been estimating those. And we also did some journal entries to move things from HERF 3 that were eligible for HERF over into HERF 2, because we were required to fully expend HERF 2 by the end of last fiscal year. So we were able to do that. And under the COVID mitigation portion, you can see all the specific projects just on a high level that total that 5.8. That's what I keep referring to. And then you can see that there's 287,000 left. So we brought in 6.1 million in lost revenues into this fund, and then are working to expend on these various projects. And we have a little bit of money left. And then on the minority serving institution portion, we have
The font is too tiny. If we can stretch it a little bit.
make it bigger, Warren. It is
Yeah,
small.
just a little bit.
Sorry.
Even with my glasses, I can't see anything.
You can also zoom your screen on your end at the top if you click on your viewer options.
Oh, that'll work. That works for me.
Zoom training on the fly here.
Thanks.
So under the minority
Oh,
serving.
perfect. Thank you. That's good. Yeah, that's good.
Under minority serving institution portion, we have that 672,000, and we have not allocated that to a specific project yet. That type of funding does have similar rules to the other HERFs, but not exactly. It can be used for a number of things. It can be used specific to student grants or institutional needs. So that one we're analyzing where that's going to be best used. So on this page, if you add up the COVID mitigation part and the MSI part, we have almost $1 million left available here. Any
The view
questions?
option, the viewing option doesn't really work because it makes it bigger, but you can't see because you can't manipulate it. So it needs to come from his end to just stretch it a little bit. But okay,
Darn, sorry.
yeah, we can't scroll. It just shows up bigger and it's cut off and,
So-
but just for the future, yeah. When we're talking about it, that'd be great. That'd be helpful just to stretch it a little bit.
So Lindsay, did you just say we have $1 million left for students?
No, I'm sorry, not specific to students. The MSI can be used for various types of HERF expenditures. It's not as broad as the other HERF, but it can be used for student and some institutional expenses. It could be either or. We did fully expend the HERF 2 student portion.
Hey, Lindsay, can you explain again why we did not spend the MSI portion or why we haven't been able to?
Good question. And I don't have a very snazzy answer. I apologize. It's because as we've been working through all of these different categories, that one category we had identified as funds and just haven't determined what we're going to do with it. It's not for any other reason besides that. We were so focused on these larger portions of money that this one is still listed as something we need to determine exactly what we're going to be using it for. Our focus was really on the 10 million and the 6 million.
Related to that, does that money go away? Do we have to spend it by a certain time?
We do need to spend it by a certain time, yes. Yes, we do need to spend it by the end of this calendar year. I'm sorry, fiscal year.
Okay. And then just to clarify the previous point, so we didn't have a deficit last year, and this is all when in last year's fiscal year, but we still did count 6 million as lost revenue. And then we spent that on things that were not, regular expenses. So our revenues were normal. So this 6 million we counted as lost revenue technically wasn't lost then. And we were able to still use it though to pay for all these COVID related issues like the vaccine incentive and the safety and all that. That's not things that are normally in our budget. So we were able to put that as lost revenue, but pretty much spend it on COVID specific issues because our budget, like our operating expenses, were covered by our regular revenue, right?
Most of that was correct. I'm going to try and hit the part that maybe wasn't so we're clear. Starting with the part that you explained spot on, the way you see it on this page here, you see 6.1 million going to the COVID mitigation for lost revenues. We had expected to need to use some of that to cover the deficit, and we didn't. That was the part you understood correctly. And yes, then we've been expending it on COVID specific items. Your comment about revenues in the UGF. So our apportionment revenues were, because we had the emergency conditions allowance to be funded based on prior year FTS, yes, our apportionment revenues were kind of normal, like you said. But in terms of international and out of state revenues, no, those were significantly lower than pre-COVID. And that's why we have the lost revenues for that specifically. But because our expenses came in lower due to our, less operations on campus and the great reduction in expenses, that's why we didn't need to use any of the funds to backfill a deficit because we had such a smaller amount of expenses, even though we also had less in revenue on the international and out of state, we didn't have a deficit. Does that make sense?
That makes perfect sense. Thanks for explaining it that way. That makes perfect sense now.
Okay, great. Anything else on this page? The next one is easier, I promise. So HERF 3, the last round of HERF, we don't have COVID mitigation anymore. That was just a one-time dynamic because in this fiscal year, our adopted budget didn't show that we would be able to take that lost revenues and put it aside. The lost revenues in this fiscal year really does cover a large deficit in this fiscal year's adopted budget. So that's why we don't have a COVID mitigation fund in the HERF 3 or this year report. So we have HERF 3 institutional, the minority serving institution, and the student portion. The student portion, they've done a fantastic job of getting that money out to the students. I have the same dynamic with the HERF 3 MSI. Our focus has been really solely on how to allocate these large dollar amounts. We're reviewing all of the proposals with our budget resource allocation committee. So the 1.1 million for HERF 3 MSI, we have that available, and we need to determine how we're going to spend that. And then I'm sorry, I don't know why I'm going from right to left, but on the far left, the institutional side, the bulk of that money is being used up with by lost revenues again, or is being projected to do that for this fiscal year. And then we had some allocated from our budget resource allocation project proposals, and then some additional dollars to these items that we negotiated with our bargaining units to pay $40 a day incentives for employees to be on campus, and then a $2,500 incentive for employees that had been on campus pre-July 1 of this year. So that pretty much is eating up the HERF 3 institutional in its entirety. You've just got 87,000 left there. So between this HERF 3 section and the prior HERF 2 section, that gives us almost 2.2 million remaining, and primarily from that MSI portion.
I have another question. Well, I think the MSI, it's pretty big combined. And so I don't know if there's specific guidelines for it, but it looks like a great use to, if we are getting this money because we're an MSI, we should spend it on DEI initiatives or resolution 18. Like that's what we got the money for. So we should come up with a plan. We have resolution 18 and other things that here's what we're gonna spend it on as a lump. And I guess the question is, the 6.1 million in the lost revenues, round 2. This one though is for the deficit. This 6.1 million is only deficit, and maybe things change, but right now it's only deficit.
That's right, you've got it.
Okay.
Rudy?
So I wanted to, for Trustee Aboon, one thing to consider, as we're really coming to the board, right, for guidance, right, on that money, because it's a big chunk of money. I agree. Is just keep in mind that $40 a day, that's an estimate, right? So we have a lot of things a little bit in flux. We probably have like 2 categories that are estimates that we hope we have a good estimate, could go higher. So $40 a day is one, and also the COVID response team, the expenses, and the team of monitors that's on the previous page. Just want to throw that out there, something to keep in mind, right? Where this is where the board can come together and maybe have a better feel for that. We're providing as much data as we can, but your experience, with these things, maybe in a previous experiences, would be very helpful.
Yeah, thank you for pointing that out, Rudy, because the COVID response team is important to discuss. It's paying for all those check-in tables, the monitors that are on campus, our COVID response coordinators. I don't know if you recall that we had to hire multiple COVID response coordinators who have been instrumental in helping with the contact tracing. And we even have a contact tracing team underneath one of them. So that number is one of many that we keep figuring out. This is a need. We're going to have to budget dollars here, and that one has gotten larger as time has gone on.
Anna?
Thank you. Yes. So just to be clear, so the 80. Go back to my my agenda item with the numbers that I can see. So the 87,000 for the institutional HERF 3 may be soft, so that so some of those incentive programs, may be coming in, and so that number may dwindle. Is that correct?
Yes.
Okay, well, for me, that's fine because I think that those services have been so crucial to getting us back up. And, I advocate for whatever it takes because, the heroic efforts that were made on behalf of staff and everyone involved. So I'm fine with those expenditures.
Yeah, I would agree with that for sure. Any other questions?
There's just one more page.
Cornelia's got her hand up.
Yes, and thank you so much for taking my question, and I apologize. There's something I don't understand quite right. So on page number 6, the lost revenue is listed in the second column, and it is indicated that this is an 1100 fund account, so it's an unrestricted general fund account. So the lost revenue in HERF 2 is categorized as unrestricted general fund, which I understand. And then on the next page, on page 7, we do have the lost revenues as a line item, and here it is listed in a restricted fund account. It does say next to the line item unrestricted general fund, but on the top it is listed as a restricted general fund. So can you explain maybe, Lindsay, what the difference is between those two?
Yes, I believe so. I think you're primarily looking at the page on HERF 2, right?
Initially, no,
Three.
page 6 is HERF 2, and there the lost revenues, it's also about 6.1 million, because it's a lost revenue offset, it's in the unrestricted general fund account, right? And all these expenses that we are listing are also like expensed in unrestricted general fund. It says account 002, which is unrestricted. But then on the next page 7, the HERF 3 lost revenue is in a restricted account.
Okay. I think I can help. So when we're looking at HERF 2 or HERF 3, it's the same in terms of what I'm going to describe. So the 6.1 million that's coming out of the HERF, the restricted fund, when it goes into the unrestricted general fund, it's covering lost revenues for international and out-of-state tuition losses because that's unrestricted general fund revenues. And we made a conscious decision to put it last year in the HERF 2 dynamic into its own unrestricted fund because we wanted to have it earmarked for COVID-specific projects and work. So that's why we have that 11002. So yes, we're moving lost revenue, called it UGF, into another UGF account. Now in HERF 3, in this fiscal year, we're going to move that lost revenues into the UGF. And as Trustee Abood pointed out, it's going to offset our deficit in this fiscal year. And the lost revenues for restricted funds, the 2 million-ish, goes straight to those restricted funds. And then we don't have a report detailing all of those individual restricted funds here. It's just the total dollar amount. It's going into specific funds like the campus store, parking, food services. Did that help?
Yeah, maybe I'm just confused by the column header, which says under HERF 3, it says it lists a 1200 account. Maybe that's just what is confusing me. But, I do understand what you're saying.
Yeah, it's a restricted fund. The HERF 3 is a restricted fund where we're able to recover lost revenues for the UGF. Just like we can also pay for other COVID-related items that if HERF didn't exist, we'd be paying for from the UGF.
Yeah. That makes sense.
Rudy?
Yeah, back to Cornelia, to your point, because I agree. Those headers can be confusing. I've had to look at that like 10 times. But I think the bottom line is about this is that HERF is distributed to, we'll say, restricted dollars, right? That's uses. So they've got to go first receive into the fund. So if you look at HERF 2, we have to first receive it into the HERF institutional. Then from there, we can use those funds for something else. And I think that's why I agree. It looks a little convoluted, but it's the way that we can keep best accounting practices. Now, one thing that I think the district did really well, we found out we did it better than other districts, is on doing that exact kind of practice. Like first recognize the COVID need within the requirements of HERF and then distribute the funds. For example, you can relieve debt of students, for example, right? But you can't directly do that for years past, right? You can't do anything, prior to like March 2020. That'd be the wrong, if you did it that way, and there are some districts that did, you're going to be in trouble with federal government because you went straight directly to past debt. But you can do it. There's another mechanism, but you first have to receive those funds into your HERF fund. Then you can allocate some of those to a specific fund to relieve debt that it was incurred in prior years. I just want to bring that out. So that's why these funds can look a little convoluted, but I think the best way the way I keep track of it is first receive into the fund where they're designated, then you can move the dollars. And I think that's how the 11,002 is best understood, because I've had to look at it like 10 times. Lindsay's giving me plenty of diagrams on this but I think what was helpful was just seeing how another district did a little bit incorrect on the student portion. That's when the kind of light bells went off, like must keep things in the proper lanes first for reporting purposes, because ultimately these numbers have to be reported back to the Department of Education. So I don't know if that gave more context or more confusion. I apologize if it's the latter.
So Rudy, can I say something? Thank you for explaining that, because I think people don't recognize sometimes that the funds were set up for transparency's sake and public accounting. And I think that that's really important to note, that when you receive the funds, putting it in the correct place before transferring it is essential to the transparency of public accounting. So appreciate all of those. Just wanted to reinforce that.
No, I find it helpful. I mean, it's a good explanation, and I'm appreciative that you are being careful to do it the right way.
I think the next page, the last page, may help with that same conversation as well, because it details out the exact lost revenues and which funds they went to. So it shows which ones went to the unrestricted general fund and which ones went to which types of restricted funds. So we put this together to try and make sure it's extremely clear, this very complicated matrix of where we received funding from, which funding source, and then where the lost revenues were transferred into. I don't know if anyone has questions about this lost revenue summary. It's the same that was presented to the board last month or just a couple weeks ago now.
So these totals are what's left or what's spent or what?
These are the totals of what was allocated and what's projected to be allocated for lost revenues only, just the lost revenues.
Got it.
And
Got
the
it.
specific funds that received the lost revenue funding.
And where they went. In other words, if there's a special place that they belong, like parking, which is just a fund of its own, then that money goes back into parking because we were not getting the kind of parking revenue that we normally would from having a lot of people park on campus. Similarly with food service or childcare issues.
Right.
Campus store.
Makes sense. Okay.
And I will clarify an acronym on here. Under the restricted funds, we have SEL fees. That's the School of Extended Learning, but it's not the typical non-credit courses. So a number of years ago, we created this whole fee-based structure of classes, and we still have a portion of classes that are fee-based classes separate from the free non-credit classes. So that's what this School of Extended Learning fees is. That's a special fund that's existed for a little while now, where we capture all the accounting for the fee-based courses separate from the non-credit courses. And we were able to recoup the lost revenues from those classes that we weren't able to hold.
That's good. Good news, good news.
Okay, so I don't see any hands. Anybody I'm missing? We could move on to our last agenda item. Thank you, Lindsay. You're probably up for the next one.
Actually, we're gonna have Rudy take on the next one. He and Cesar and the team put together that 311 report, so I thought I'd let them talk.
So
Oh, we need to put it up again, or in the next, the next one is lots of numbers again.
So just wanted to, couple of quick comments before we dive into 311. So this is the annual report, right? This is cumulative work, a year's work of accounting, lots of debits, lots of credits, lots of work to really present information to the chancellor's office about how money was spent. So kudos to everyone in fiscal services and everyone actually across the district who did their coding. So, you know, kudos to everyone. So this report 311 was due on the 11th. That's when we turned it in. Got that in on time, so that's great. I will let you know that between now and the end of the audit, we will go back in and make some updates to this. This is very normal practice with the chancellor's office because they understand that a lot of districts are going through the audit. So, and they're more interested in like getting the best data to assess how the apportionment dollars are having an impact, right, on what we're doing to serve students. So be looking out for that. I'd say I've been told by the chair's office that right towards the end of November, they will lock it down. At that point, it'll be a lot easier than to look at final numbers across all districts, but specifically ours. So we anticipate to get our audit done on time. So that's looking good. They just started not too long ago, so we're on track there. Okay, so hopefully that gives a quick introduction about 311. We got it in on October 11th. Now we'll say the 311 can seem a little daunting. I know, Trustee Everett, you saying that the numbers, right? There's a lot going on there. So I think the 311 is one of those that can be pretty daunting. So the way I like to approach it tonight is, okay, it sounds like a big number. I don't think it's too big. I broke it down, I'll say, into roughly 10 sections. So I don't anticipate a half hour per section, maybe more like 25, just joking. So we'll go through. Obviously we can stop at any point and take questions, but I'm going to kind of go through as a big overview of 311. And the great part is we have folks here who can, if I don't have an answer, someone else might have an answer. And if we don't, we'll get back to you if that helps. So the first part is the 50% law. So that starts at page 1. Oh, excuse me, page 2, my bad. Page 2. Okay, so the 50% law, that really at the end of the day is it's doing a couple of things. The main thing it's doing is helping us calculate whether we're spending at least 50% of our dollars on instructional costs, right? We don't want it to be all admin related. We want it back to 50% cost. So that's the end goal. Now to do that, the way that we code our stuff is is in a very specific way that allows us to get to that answer. So every org has its designated program code, or as the chancellor's office calls it, activity code. So if you look at that first section there, right where it says district ID 650, I don't think I have a laser thing to show you there, but where it says AC 0100 to 5900, That's the range of program codes in our chart of accounts that allows us to designate what's instructional. Okay. The next part over is a non-instructional. And as you work your way through those numbers, you'll see if we go to the page 4 to the end, I think right there. So if you look right in the middle where it says percent of CEE or current expense of education, which is up on top, tells you what the acronym is. We say that we're above 50%, so we're good, right? But that gives you a good sense of how the dollars break out between those two broad categories. I'll give you, give you a minute or so to kind of digest these numbers. Okay, so that's the 50% law. We can always come back to this. The next part, the second section, as I'll call it, is the combined balance sheet. So this is very typical, a lot of financial statements, right? Your assets, your liabilities, and your equity, or in this case, we're looking at our fund balances. So we'll start at page 5, next page. So from page 5 to page 21, what you have presented here are, for each of the funds, you'll have your assets. Okay, mainly we're looking at the cash, we're looking at our accounts receivable, any prepaid expenses, and liabilities. I do want to highlight as you go through this later on tonight, because I mean, I'm an accountant, so kind of burning to look at this in more depth. But if you look at the accounts receivable, one thing I wanted to highlight there, give me a second here, is that 1/3 of that accounts receivable roughly 1/3 relates to student accounts. Okay, 2/3 of it relates to deferred revenue. Just to give you a sense of what's in there, right? Because a lot of times you're looking at these numbers like, what is in the accounts receivable? Who owes us money, basically, right? And this is, hopefully these numbers gives you a sense of what makes up these balances there. As far as prepaid items, what I want to highlight there is, right, prepaids can sound bad because you're really paying for something ahead, right? Cash is out the door, and now you're trying to make sure that you get the benefit from that cash payment. So we have roughly 3.6 million of cash that went out the door that we have future benefit on. Half of that deals with workers' comp, and the other half deals with something that we've started to do in our shop, which is when IT goes out there or other groups and they engage folks for services, especially like a 3-year service, right? You don't want to go, well, from a accounting perspective, you've got to do a prepayment and spread the impact of those costs over time. Now you could just say, hey, we bought, we bought some services for, I don't know, we bought a server, trying to come up with a good example with IT. Like IT has contracts that are 3 years out. So you could pay for it now and say, well, we did 3,000 this year. And now what it happens is that you have a deficit. I'm making this number up, right? You have a $3,000 deficit. Instead, what really needs to happen from an accounting perspective is you've got to take that 3,000, put it into prepaids and recognize 1,000 the first year, 1,000 the second year, and 1,000 the third year. Spread it out. That way you don't have a chaotic movement in your fund balance, which doesn't align with the benefit you're receiving. So hopefully that makes sense. It's part of the matching process, in accounting land.
And you
Okay,
can
so
also use your, I was going to say, Rudy, you can also use your cursor as a highlighter.
Oh, I can.
Yeah.
Do you see that?
Yeah. If you put your cursor on it, you should be able to see it.
Okay. Does everyone see my cursor here? Let's see. Okay. Oops. Okay, I'm putting it right there on the 3.
Yeah.
Yeah.
Yeah. And if you just like, I saw it for a second there. Anyway,
Oh,
but yeah, so that's something.
It was Oren. Okay. So
Oh yeah, Oren. Yeah. So Oren has the cursor. Okay. Never mind.
okay, so there you go. That's gives context. And then on the accounts payable, right? That's money that we owe vendors. So the good thing I can report is we've looked at the numbers. We didn't, at the end of 2021, we weren't behind on any payment. That's what you're really worried about in accounts payable. So we're good there. We vetted that out. If anything, we have timing issues on checks are going out as at the end of the year. So if you go from page 5 to page 21, so let's go to the next page just to give a sense. So as you go through funds 11, 12, and 10, you'll go through the next part, which is the fund balance. So a typical equity section, but in this case for us, it's our fund balance. And now you start to see where our ending fund balances are for any one of these funds. And if you go to the next page, page 7, now we're on to the next set of funds, 21, 22. And it's the same idea, right? You're really looking for accounts receivable. That's what I'm looking for. I'm looking for any monies that we owe people. And at the end, if you go to page 8, one more page, we're looking to make sure that we have some kind of nice positive looking fund equity balance. Okay. So again, that takes us all the way to page 21. Page 21. And just FYI, what we do for our review, we're looking for anything that looks strange. We're looking for anything that like a weird, like accounts receivable should not look like a negative. So we want to make sure that's the case. If we found anything that, and we did find something that we needed to correct, and we did correct that. And so we worked through that process so that our final 311 reflects those changes. So we're looking for anything equity that's hopefully not negative, that's kind of generally bad. It means usually what it means is that there's a transfer that didn't happen. It's not that it's bad, like we didn't have money, just a transfer that didn't happen. So that gets you to page 21, and then we're off to the next section, so which is revenues. Page 22. Okay, so page 22. This is the part where we really it's a deeper dive into the revenue numbers, right? The federal, the state dollars, and that goes into page 22, 23. So we'll go to the next page. Okay. And then there you see, so you'll see an item like I say EPA proceeds, the education protection account. You'll see those dollars come in. And for those that ever want to go to the Chancellor's office, there's exhibits that show you how these tie back. And if you go to the next page.
Rudy, I had,
Yes.
before we get too far past it, I just noticed that when I looked at, I think it was page 24, and the revenues.
Okay.
One of the things that was interesting to me is that our state revenues were 53% of our total. The local revenues 34% and federal about 12%. So that's kind of the proportion of where we get the big picture money. I was wondering if the federal was unusually high due to HERF or due to, that wouldn't be unusual, but due in part to grants.
Yes, and I think that would be really apparent when we get to the transfers. That's where you see like these big transfers of dollars. But we can go back. Let's go back to page 22. We see the federal.
Yeah.
Yeah, right there. Correct. So this is something, you know, I don't know, Cesar, if you have any insights into what you've seen in the past, or Lindsay on the, but yeah, this is something to your point, Trustee Croninger, that this we know if you look at this, the student center funding formula, we get our dollars from, let's say 30-ish, 35-ish from taxes. We get some about maybe 10-ish from EPA, and the rest comes from apportionments. So that's definitely, and that's exactly what we're looking for. We're looking for things that look strange, right? When we do 311, but also not just strange, but we need to be able to explain these things. And that's one that we would say, okay, we look at HERF, right? We got a lot of dollars. Okay, so that takes us, revenues goes all the way to page 25. And so that gets you all through all the way that the revenue dollars came in across the restricted and unrestricted funds.
Okay.
Trying to think of a good, that what Trustee Croninger said, that's a good takeaway on understanding these revenues. And I think using that method of looking at the percentages gives a good sense of how the district receives funding.
Caesar has a comment, I think.
Yeah,
Yeah, thank you. Trustee Croninger, just to go back to your question, as far as some of the trending with the federal funds, it can fluctuate depending on what kind of federal grants we're receiving. And whether it's a 2-year, 3-year grant, sometimes we can receive it for about 2 to 3 years and then it goes away. But you're right. Some of what was abnormal this last year and a half is that we have been receiving some of the HERF money. What I wanted to really speak to though was the state side. What was abnormal on the state side, especially in the unrestricted general fund, is that about a year and a half ago, the state thought that because we were in a deficit, they made a lot of cuts. And for us, even though we received a lot of deferred revenues, meaning that we knew we were going to get that money, so we could still record it, knowing that it was coming in the future. Where we actually received the cut was on EPA revenue. Normally that would be about 10 to 12 million. And so a year and a half ago, we only received about half of that, about 6 million. Well, after the state released its January tentative budget, the governor's preemptive budget, they realized that they were going to get a lot more money than they anticipated. So they restored all of the EPA revenue. So what we're going to see on the financials, which we're going through right now on the audit, and we're trying to, Reed and I and Lindsay, we had a conversation about this, about how we could be more transparent about this. And the auditors gave us some good guidance. How do we explain that on the financials where normally we have about 10 to 12 million, and then it dropped to 6 million, and now it went up to about, I think about 20 million, 18 million or 20 million. And so it's a huge fluctuation, and that is not normal. So that's the only piece I wanted to speak to about the state. That's where you're going to see a little bit of unusualness, but that's because it's been an unusual point in our recent history.
And that probably feeds into what Lindsay said about the change in the outcome for our, rather than having a large deficit for last year, we're much better, we're ahead.
Correct.
So, but we'll get to hear about that later.
And then one more thing to kind of tie in these different sections, I just wanted to point out here, if you look at the total general fund account, right, that's both unrestricted and restricted, it's 161.7 million. And if you're to look at page 26, 26, page around here. Okay, sorry about that. I'm trying to, there was a section on expenses that reported 151. Right, so you look at the revenues and expenses. I am only pointing that out just to show that there is some coherency to this 311. It just, you've got to kind of connect some dots. So I just want to point that out. So if you go back to page, okay, so we're on the next one here. So page 26. So there we go, right into that. So 126 through 31 is the expenses by program. One way that I look at this is a pivot of information on the 50% law report, that the first few pages we saw. What do I mean by that? We basically pivot on the actual program code. So if you remember on the 50%, you had the program ranges running up on top on the header. Now what you'll see is they pivot, and now we're looking at program codes per row. Okay, so that's one. That's from a formatting perspective. In terms of the intention of this section is to really look at where are we spending dollars, like what departments are spending a lot of money from an instructional perspective, which departments are spending a lot of money from a non-instructional. So I'm going to highlight two just to give a sense of like one way to look at this. So if you look at humanities letters, we know we're spending about 6.4 million on that. Right, correct, thank you. So right there, that is activity 1500. The instructional salaries and instructional salaries and benefits is 6.2, and the non-instructional part is about 270,000, and the operating expenses about 4,600, we'll say. And you get a sense by department who's spending a lot and what are the percentages that one department is spending. I would imagine that business spends quite a bit, and they do. Health spends quite a bit. Now, that's the instructional part. Let's go to page 29. Let's look at the non-instructional. So I'm going to pick on fiscal services. So what's fiscal services costing the district? Now, maybe I don't want to talk about this number. But I thought, hey, got to be transparent, right? So we know we're spending 3.6 million on fiscal operations, because whenever we code our stuff, we use that activity code or program code. So and again, you would expect to only see non-instructional, and that salaries and benefits is 2.3 million, and the operating expenses 2.3. You're saying, well, what are we spending on? Well, it's not paper, it's a lot of contracts that we have out there that fiscal services oversees. So that gives you a sense of how our dollars are being spent two ways: instructional versus non-instructional, and then within those categories by program. So hopefully that gives you a sense as you start to get a better understanding of our spending, how much it takes to run this district.
Jonathan has a question.
Yeah, it's not a question. I was just gonna say, I feel like this is perfect. And I think we were asking for this to be presented to the board a few years ago. And I mean, it's always been there. This is amazing. I think it should go to the board and it should be explained, like, here's the different activities and what they cost. I think that's just important for everyone to understand. It's not like good or bad, it's just like, it's information to know that that's what it takes to do this, and then maybe we can tie this to our goals then too, like these activities are achieving these goals. So
one thing I'd like to throw out there for trustee, but that's a great point what you're making. I'm glad that you see the value in this, because coming from the private sectors, a lot of us here in business services have, and fiscal service specifically, is that this is very much akin to a 10Q, a 10K, right? And as you use percentages, you can start to compare across districts, especially. So what you're seeing here is the same format across the whole system.
Oh,
And one thing that would be good, I think this is where I would love to get more insights from the board, is when you look at, let's say you have a friend at a district that you really like, of course, second only to us, of course, right? Is you say, hey, they're really successful. Well, how much are they spending in fiscal service as a percentage? Is there a correlation there?
yeah.
Right? And the good part about the chancellor's office is that they're making this data available. Now, I would encourage everyone on the board, if you haven't done so already, go to the chancellor's office, go to their data dashboard, and you're able to see a lot of key metrics real quickly. So I would encourage you, and I think that's where your experiences really would come to play, where you see correlations, connections that you're kind of, I don't see the forest a lot through the trees. So this is where the trustees really come in to play.
Thank you for putting this together. I guess one last question is, to these categories, all the activity codes, I assume they're set by the chancellor. But I guess a kind of related question is, we might be doing that. We might not just have that as the primary code for that activity that we're spending on. Like, I see that there's community relations under 6710, but then there's also 6800 as community services. So it seems like it's kind of related. So it seems like maybe there might be things that kind of fall in two activities, but they have a primary one, right?
Yeah, Cesar, I don't know if you want to give a quick, does everyone have like 2 minutes to talk about that? Because I think that's a purpose, right, of this group, is to get a sense of how much work is involved. That's kind of what I'm trying to convey. A lot of work involved in this, a lot of efforts. But I know Cesar taught me about when I got here about our process, which is focal, how we code stuff. To your point, Trustee Abu, like, how do we get this data out, right? It's there every time we code something. Exactly.
Anna has a comment, and then I do too. Anna?
Thank you. Yeah, I was going to say, I did find the categorizing much clearer here than in that earlier spot where we were discussing lost revenues. I thought they were very clear. And I did agree with Trustee Aboud about the activity codes that that, seem to be a little bit confusing when, you have two things that are under two different codes, but on the whole, I just want to echo that it was really clear, and I found the explanations to be, quite useful, and something that I think the board, as well as the rest of the community, would be happy to understand. So, thank you for everyone for your role in making this chart much more understandable.
Thank you.
My thought was, Rudy, you said already what I was going to say, which is I would love to know how we compare with other colleges. And I know that's a bunch of work, but that's what the chancellor's office is doing in some respects with this data. And then there are policy issues embedded in that information, which I'm looking, for example, at staff development, and assuming that we're talking in part about training our staff and professional development. That's really important. And so I think there are places the board would really enjoy discussing this. And then one other point is, Jonathan, I 100% agree. There's another step here that we have taken in the past from time to time, which is to look at our departments in terms of the number of students they serve for the amount of money that we are seeing there. And it plays out about as you would expect, but it is interesting information to understand our programs. What are more expensive, like nursing, and what are our other programs that really make up for an expensive program as we try to balance it all out. So thanks.
Thank you. Would it be real helpful if I put it in the chat, the link to the Chancellor's Office dashboard, unless you already have it?
I know where it is, but go ahead.
Yeah, there's a couple of dashboards. This is one of them.
Yeah, I just spilled some water. That's why I'm a little bit on and off camera here.
Trying to kill your computer.
Exactly. Fortunately, it's raised up, so I was lucky.
This is Cesar again. I just want to go back to Trustee Aboud's question on whether sometimes there's some categories that kind of cross into other categories. And so there is overlap sometimes where one category can go into one or two or three different categories. We do, and back to Rudy's point, that's where it's important to just code everything as best as possible. But we really, the reference or the resource that we use that pretty much determines all the program codes whenever we needed to really understand what a program code is from the budget and accounting manual from the Chancellor's Office. So sorry, I know there's already 2 links in there. I'm going to add one more link, which is on the accounting side, which is what is our Bible. I mean, we use the Chancellor's Office budget and accounting manual. It hasn't been updated since 2012, unfortunately. But that's the resource that we have. It's what we use for determining whether something is material versus whether something is really equipment. And it's how we determine what type of activity code we should use for a certain staff member, or for identifying whether it's even just a contract, what area it should go to or be charged to. So hopefully that's helpful. If you did look at the budget and accounting manual, just look for activity codes. The section about activity codes, I think, starts like in area 4-4, but hopefully that'll give everyone a little bit of context.
Thank you.
Yeah. One other thing that I think you can do with this data, which is helpful, is cross-reference things. So in the big picture, which in my mind, I looked at what proportion of the total is instructional, and that was a little over 33%, and non-instructional was about 31%. I wouldn't have guessed those numbers if I didn't get them from this. So, operating expense 22% or 23%, things like that. It tells us big picture things about the institution that I think are important to understand. So.
So the next section is the GAN limit, page 32. Okay. So the GAN limit here, this is from Proposition 4, 1979. I have the notes here, so I haven't memorized this. I just wanted to sound like a legal scholar here, but I'm not. So, but this is really important. This does impact, like this is a calculation we have to do. This is the one that was looked at the last board meeting. So what we're doing here is we're saying, okay, there's some statutory limit of funding for the district, in this case, 102. We start with 100, almost 107 million. We have to do an adjustment based on the FTS is reported. So now that gets down to about 102.5 million. That's like the statutory limit of what we're allowed to get funded, or the state is allowed to invest into us. Then from there, we back out. We'll actually, I don't know if we back out's the right word, but we look at our funding, which includes state funding of apportionments, 44 and change, 44.4 million. A little bit of the state's subventions, and we get the local property tax, 33.5. So when you add those two together, right, we're down to 70.1 million. We're well below the max funding that we could get from the state. So we're good. I think, and Lindsay, I think you told me, right, I think the Redwoods, they're pretty self-funded. There's a district out there, and you can tell if you look at theirs, their limit is above their statutory. So I'm not sure how that works out for them. But anyway, so there's nothing too exciting, I think, about this one. The next one is revenue, expenses, and fund balances. Page 33. So from page 33 to 43, this works like for a lot of people look at income statements. This functions a lot like that. This is something that Lindsay was sharing earlier with our monthly report, except it goes across all the funds. So you have your revenue section, your expenses, your beginning fund balance, and your ending fund balance. So if you go to the next page, right, it just runs across the different funds. And that goes all the way to page 43.
Excuse me?
Yes.
What the red numbers, net other financing sources, other outgo, what are those numbers? The red
Goes back
ones?
to the first one.
It's, yeah, on page 34. We were just looking at that. Oh, that's debt service.
Oh, yeah.
We haven't gotten
So-
to that yet. Never
yeah.
mind.
So, and a good convention, right, in a lot of reports is that the brackets, right, it says other outgo. So those are dollars going out.
Okay.
Now I would have said too, that decrease should have been brackets too, but that's what that is as well, the red.
Yes.
Let's see, so that takes us all the way to page 43. That's the last one. So now that's the trust funds. So if you go through this section, the revenue, expenses, and fund balances, you'll go through all the funds, and you'll get to this last page. The next page is the interfund transfer report. This goes back to what Trustee Croninger was talking about, a lot of dollars coming from HERF. So page 44 is the transfer, interfund transfer report. So left side, that fund, those are the dollars, coming in, fund numbers going out. So let's look at the fourth row. You'll see 6.4 million going out of Fund 12 over to Fund 11. As an example. And you'll see, right, you see a lot of 12s, like dollars coming out. So it's just another way to summarize a lot of that specific line item that you would see in the revenue, expenses, and fund balances, the previous pages. Just one way to summarize the transfer of dollars.
Okay.
You can also see who's receiving these dollars, right? Who's sending what to what. So we know that the Child Development Fund is receiving dollars, the cafeteria is receiving dollars, the bookstore, etc.
Right.
Does the bookstore fund, which I think is generally in the 6 million range. Does that number include basically assets rather than cash?
I guess we should look at it. That's it. That's a good example. So we put this to the test. So that's page.
Quite certain that it does, but I don't recall the number offhand.
That's what,
Yeah, you want to see basically their back. We can go to page 13 if you want. And actually, we're kind of going through a little quick kind of case study right here, right? What happens if I have a question? How do we connect these, right? So we're going here. So page 13, right? You were asking Croninger about this. What's in here? So we got accounts receivable due from
Almost
other
seven.
funds.
almost
It's
seven.
almost all a building, the building and the accumulated depreciation and the fixed assets.
Mhm.
So the cash is just what? Let's see.
$500,000 at the very top.
Yeah, the waiting deposit.
Mhm. And in the key line is "and in banks." That's the cash.
Okay.
I see the more sensitive area on this, right? If you're like from an audit perspective, like what balance is the most sensitive one? It's going to be the inventory balance, right? Because you have books and things are ordered. So obsolescence is a big factor here. AR, the big issue there is bad debt allowance. So Cindy Rogers does a great job, right, to keep this in order. So really rely heavily on her to help us with that, what that bad debt allowance should be and obsolescence. So she does a great job. Yeah, this is, I'm glad you brought this up because we're able to come back, right, within the 311, ask these questions and have answers to them real quickly.
Yeah, no, it's helpful to see how to use the 311 for that because I missed it when I went through the first time, but that $6 to $7 million has shown up in places where you would think it was cash, like, when you're talking about what are our total reserves in all the different pots that we might have, or what are our total spendable money, in cash flow. Well, most of that isn't spendable. So
Would it be helpful if I have my notes here, how I break it out. Would that be helpful if I just shared that with you, like how I'm breaking out the 311? You can share.
sure, you could send us an email around about
Okay.
that.
I'll clean it up here and that way when you're going through, you can say, okay, I'm in this section. How do I get back to another section? You can see the page numbers. So we'll go back to page 44. Okay, so page 44, we're done with this one, but that brought up a great question. You're on this one, like, okay, I want to know about the assets. Okay, that's in the balance sheet section. So we'll go to page 45. Page 45 is I think it's a great section. It talks about the lottery fund. And one way to look at it is look at it in its, okay, there's two parts, I suppose. One part is you have the actuals versus budget. This first page is the actuals page. So you see up on top versus the lottery actual report. The second page will be the budget report. Now, in each one of those, you have two parts, the unrestricted and the restricted. Okay, so when we look at the unrestricted, we get dollars, which that goes right into our apportionment numbers, our revenue. So in this case, we got about 2.4 million. And those funds were used to take care of expenses in the categories down below: instructional activities, support activities. So we use up all those funds, take it to zero. Okay. On the restricted side, we had a beginning balance of 1.3. We got some more proceeds of almost $1 million. Down below, you see how we use those funds. So we use roughly 500,511. It's towards the bottom. Okay. Now I want to highlight this to share with you the process that we go through with budgeting. So when each budget owner goes through, right, they're instructed to do their budget, but they also have to be cognizant of instructional material supplies where we can draw dollars from the lottery fund, right? Which helps out to offset the impact to UGF. Now, there's a lot of rules around it, and Cecil is really good at making sure you follow those rules. One good thing that's happened, you know, I'm not sure, maybe Lindsay remembers when it happened, but they changed the Senate bill. There was a Senate bill that came and said and expanded the definition of instructional materials. It now allows for technology type items like Chromebooks. I guess when they wrote this way back when, it was before computers. We fast forward, now we got computers. It didn't make any sense, right? You districts are spending so much money, right, to help students, but we couldn't use these lottery funds. So now with that Senate bill that was pushed through when it was, now we're able to start really churning through these lottery funds, which is fantastic for the district. Now, as a policy, Lindsay, correct me, I think we said we do between $750 and $1 million is what we kind of like to have there as an ending balance. We don't want to dip too much into it. Kind of we look for that Goldilocks level, not too much, not too little. So what you'll see here is at the end of 2021, we had 1.7 million available in lottery funds. If you on the restricted side, on the unrestricted side, we took it down to 0. So fantastic there. Now, if you go to the next page, this is what we're anticipating for the year. We're going to get about 2 million, we think, for the lottery fund. We're going to use it all up on the unrestricted side. On the restricted side, we're going to get another 1.4, and we're going to go through it. I think here we're anticipating to use 1.4 million. These are the dollars that we saw all of the budget owners request for 21-22. So I just want to emphasize that I think we're doing a great job really using up the lottery funds so that we don't dip into dollars of the UGF that could be used for other things. Okay, so no questions. We'll go on to the second last section. Education protection account. So page 47. This one's pretty straightforward. This number here, for those that are on the go to the chancellor's website, this number right here, the way that we report it really can be broken out into 2 buckets. We combine it. We're gonna make a change this coming year. So this bucket includes both current year, includes both 2021, we'll call that the current year apportionment, which is more like 20.46. And that was netted against adjustments from a previous year. So going forward, now here we have to report it as one number, but in our financials, we're going to be able to quickly tell you this year what a part is the current year and what part refers to prior year adjustments. That is all to say that in 2021, net of any prior year adjustments, we've got roughly 20.3 million in EPA dollars, which is really good. And that goes back to something that Cesar brought up about an increase in this type of funding. Okay, that's just a one-pager. That ties to something called Exhibit A at the Chancellor's office. So if anyone ever cares to look that up. And then the last section is the STRS and PERS page. Last one here. This just gives a sense of how much we're spending in those 2 buckets, STRS and PERS. How much is increased, how much the increases have been, and what the projected increases are in those buckets.
Yeah, this is a place that reminds me that when we make our budget assumptions in the big budget, I have always felt like it would be really helpful to say, and this is an example, we spent last year so many $1 million on STRS and PERS. This will increase by, we usually say it will increase by some dollar amount, but we're not seeing that underlying amount that we spent. And so you get a much better sense of the proportion of what's happening when you say, for example, we're spending, 10 million on STIRS plus 6 million on PERS, and it'll increase $1 million versus, some different number. You just really don't know where you are without the bigger number that you're already spending.
Yeah.
So I just think that would be a helpful thing to do with a number of our budget assumptions, so you know how big the number is that you're starting with.
Okay, that's a great point.
And on this page, I just want to note a difference. This is new on the 311. In prior 311 versions, we were asked to provide our STIRS and PERS rates for current and previous years. This is the first time that we've been asked to actually do some projections for future years. So from now, this is the first year that now districts are being requested to do that. And so it'll be interesting when we compare against other districts.
So every district is doing their own projection?
Yes, this is now a part of the 311. Everybody
But I mean,
is,
the percents over on the rate?
these are percent increases, but on our financials, we do also provide what we expect the PERS and STIRS rates to be over the next few years. And so we have that on last year's financials. We'll also note it on our current audited financials that we're working on. But this is a little different. This shows dollars that we spent and how much of a rate, how much of an increase we expect on dollars, not on rates, but on dollars.
Right, but doesn't the rate give you the dollars?
Yes, but the STIRS, so for example, the PERS rate is expected to remain static over the next few years, where the STIRS rate is expected, excuse me, the other way around, the STIRS rate is expected to remain static, where PERS rate is expected to increase. So even if we see an increase here, it doesn't really tell you the story of what's happening, but on the audited financials, it'll give you a more specific and clearer story.
But is it a statewide assumption of the amount of the increase, or is every college making up their own assumption?
Every college is making their own projections on how much they're going to spend in their district for STIRS and PERS based on the number of faculty and staff that they have and whether.
And the agreements, right?
Exactly.
Well, yeah, the agreements would be a big thing, but the amount that PERS and STIRS will increase what they want from us is a big thing. That's statewide.
Yeah, that's a statewide number that usually is projected out by PERS and STIRS. And then I think what Rudy and Cesar are saying is true, because usually we get a number that this is where PERS is going when they make their decision. STIRS does their vote, but lately we've been really lucky because the state's been covering the cost for us. I mean, that's been the real issue helping us with. So these are all set at the state. Well, they're set by a board at one level and then the state at another.
Yeah, it's many factors, but yeah. But generally tied to cost of living and agreements and other things, but yeah.
Well, I have one more question, and that is, do we reflect in here and how the foundation contributions to our programs?
You kind of cut out right at the key point of your question. Say that again.
Do we reflect in this 311, and if so, how, the monetary contribution of the foundation to our various programs?
I can take a stab at that. So the foundation is a separate entity entirely from the district. The bulk of the foundation's contributions to our students and our programs are directly from the foundation. There are some programs where they literally transfer money down to the district, and that would be reflected in this 311 in specific areas. But that's a very small amount of how much the district contributes to our students and our programs.
No, I understand,
The
but
foundation.
I'm just wondering whether it shows up. I mean, it's in the millions. Some of it is direct to students, like scholarships that wouldn't show up here, but some of it is for particular programs that are supported. So
Yeah, the Chancellor's Office's intent in having us complete these reports is on our financials, not on the foundation. So the foundation's financial information is not included in here.
No, I wouldn't expect that at all. What I'm talking about is they support Running Start. They support transitions, you know. That must show up somewhere because it's a source of, in effect, revenue for us. Isn't it?
If the money is transferred to the district and we then expend it, it does show up in these reports.
So it would be a local revenue.
Mhm.
Correct. And so it would be mixed in with other local revenue, wouldn't be broken out.
Okay. Well, any questions, folks?
With the last page?
I thought we did. I'm sorry.
Just trying to remember
Yep.
for the halfway point or for the last page.
That's the last page.
Oh, okay.
Yeah.
I just want to say thank you for going through this for us. I've never had this kind of presentation on the 311s ever. And it will help us, of course, as we see them in the future, we can focus in on what's changing and what, you know, jumps out at you. And it also, the passion that you have for doing this work and doing it right really shows. And I appreciate that. Thanks.
Thank you. And I thank the team because this is a great team that I have. So, and a great boss. There's a lot of teaching. So, yeah, thank you.
Okay, well, I think we're done except for items for future consideration. We kind of discussed that earlier. Does anyone have anything to add now? All right, well, then we will be adjourned until our next meeting.
Thank you.
Hey, thank you. Thanks all. Bye.
Everyone, have a great evening.